This is Meta on the daily chart, and they recently just announced their earnings. Mark Zuckerberg's $46.5 billion loss on the metaverse is so huge that it would be a Fortune 100 company. But his net worth is up even more than that because Meta blew Wall Street expectations out the water this past week, with profits doubling thanks to the year of efficiencies. So before we go through the analysis, before I give you some levels of interest on the buy-in standpoint, and before I give you levels to take profits, let's look at this video. It is coming from CNBC.
You heard Stephanie Link yesterday telling us she bought Alphabet on the pullback. She's been telling you that she's been trimming Meta into the print. Now we get the results. The stock's down. Steph joins us now, of course, with Hightower, the chief investment strategist there, a CNBC contributor and a committee member. So, Steph, first thought to my mind was like, I know Link. She's probably buying Meta today. She's probably buying it on the dip because that's how she rolls. Are you doing that?
Yeah, well, I am very tempted. I'm just going to let it settle for a couple of days, but this is definitely a better buy than a sell for sure. I mean, look, the quarter was outstanding. It was offset by the cautious commentary about the geopolitics and also very high expectations. The stock was up 141% into the print. But they just beat earnings. They grew revenues 23%. Operating margins were the best in 2 years. So you have year of efficiency and you have growth. By the way, I mean, Reels going neutral to revenues, that no one thought that was even possible 6 months ago. So that was a real highlight. And Reels actually drove 40% of engagement for Instagram. You have Advantage Plus at a revenue run rate of $10 billion. You have AI increasing engagement 7% to Facebook and 6% to Instagram. So AI is certainly helping. They are monetizing it. I think this is in early innings. And that's the reason why I'm more of a buyer than a seller. But I understand that the stock is crowded. I think all the FANG stocks are crowded. That's what the reactions are telling you. But this is not a fundamental problem. And if anybody wants to chip away at the guidance was fine. Revenues were a little bit wider because of the uncertainties macro. I think that's very prudent. It's still going to grow double digits for next year. And the things that they can control, which is expenses and CapEx, that was lowered. Both were lowered. And that's exactly what we wanted to see. So you have a strong product cycle story, many different products. You overlay that with AI, and you have a stock trading at 14 times, as well as a company that is committed to keeping the cost pressures down.
I hear you.
Yeah, it's better buy than sell.
I hear you. It all makes perfect sense. The problem with all of that is that it might not matter, because if you have a different kind of market now where everything you said is true, and Microsoft had a great report, and the stocks are still going down, that's telling of a different kind of market.
Well, there was an elephant in the room.
For now. For now, Scott. For now, absolutely. But fundamentals will eventually matter. And the fundamentals of this stock, Meta, was so much better than it was better than Alphabet. But I bought Alphabet because I thought that was absolutely ridiculous, because 80% of their business is advertising, not cloud, and it acted like it was the reverse. And so Meta, I think there's no blemishes whatsoever on this quarter or the guide. It was just a cautious commentary. So it will matter at some point. But again, it's up 141% on the year. And that's why you got to let some of the froth out. Let all the panic selling be done with, but I'll be back in if the stock falls materially from here.
Now, this is the weekly chart. We're going to go straight to the monthly chart. And for the past several months, price has been basing. Rightfully so. Price is within this support resistance band at the $300 round hole psychological number. You can see since the October lows, price has been in a straight just line up, and so price is just taking a breather. Let's go down to the weekly chart, and I see a couple of levels of interest. One right here. I'm going to take off this dotted green line, and we're going to call that weekly buyers down at, say, 263. This is another level of interest, and we're going to call that weekly buyers as well, down at the 230 level. And again, the sideways price action, price attempted to get to this level, sub 270 a couple of times, which implies to me that there are definitely buyers waiting for price to decline so that they can load up and go long. All right. The one note, I have a target at 350. That's where we see some rejection wicks that could not close above the 350 level before price just collapsed. So that is to be a strong level of resistance if and when price gets that high. Now going down to the weekly or the daily chart. Now this was the first weekly zone below price. I'm not in love with the zone only because the price rally dipped all the way almost 100% into the zone and then shot away. So can this zone work again? Rightfully so, based on these buying wicks down here, and then you had another one after the sell-off in which investors saw it as an opportunity to go long after price was at 330 just earlier this month. Going down to the other weekly bias level, well, this was a gap basin and then the rally. So let me look at that again on the weekly chart. It's okay. It's not bad. You know, the move away wasn't the strongest, but kind of like this move away wasn't the strongest. It happened to work. Now I do want to point something out on the daily chart. I do see a level of interest, and we're going to call that daily buyers. So you got this rally, two basin candles and a rally out, taking out the pivot high to the left. So, and as you can see, price actually came into and dipped its toes in the top portion of the zone and then pulled away. Price attempted to do it a second time, could not. And so I love this area down here to potentially go long if and when price gets down here. Now the timing of entry is going to be based on where the NASDAQ is at, the QQQs in particular. If interest rates stay high, if they increase again, well, that's going to put pressure on the tech stocks, as the way they grow is through capital. The way they get that capital is through the financial markets. But currently, right now, the cost of capital is much higher than it was 12 to 18 months ago. So, but the levels again, 270, 260, huge buy level with a profit take target at the 350 level. Thanks for watching. Subscribe. Please like the video.